Thank you for joining me today. It's December 3rd, 2025, and this is our weekly update. We're going to get right into it. If you have questions, make sure you send them here. This question comes from a good friend of mine. I'm reading about Warren Buffett holding record high cash reserves. What does it say about the market? Well, Berkshire Hathaway is a $1 trillion company now. So record number of cash probably isn't as important as record percentage of cash, which, yeah, we're about 30% cash for that particular investment holding. And Warren Buffett's often called the Oracle of Omaha. He seems to know where things are going even before they happen. But let's put this in perspective. Warren Buffett has an index that he, sort of vaguely came up with one day. That valuation has been stretched now for 15 years. If you followed that, you wouldn't have been invested this whole time. He very famously, bought Coke after the '87 crash. But people forget he sold several years beforehand. He's been selling here for the last several years now. He's actually recently been picking up one of the large search engine companies as a new purchase. But he does have a lot more cash than usual. But what does this really tell us? Warren Buffett has a luxury most people don't. He actually takes a 5-year outlook. He's okay with being wrong for a period of time in order to protect his long-term investment. He learned something a long time ago that I try to instill with clients a lot. The best way to make money is not to lose it first. And although we usually do not advocate having high cash positions for no particular reason, what he does have the luxury of is being wrong. As a mutual fund manager or hedge fund manager, selling into the last 3 years, when the market has gone up, 20% 2 years in a row, and right now is up in the mid-teens, would not have looked very good, and probably would have gotten him lost. As a matter of fact, people forget this very quickly, but in 2020, 2021, people were writing articles about how Warren Buffett had lost it and didn't understand the market anymore and would never be able to catch up to other managers that were buying the hot new things. All those articles have gone away. He's been consistent. He is consistent. He sticks to what he knows best. He's very famous for saying, him and Charlie Munger used to say something along the lines of, buy wonderful companies at fair prices. Don't buy fair companies at wonderful prices. And he's right. Buy great companies, but don't overpay for them. And if you're trying to get a deal on a company, usually there's a reason why it's a deal. It's probably not got that great of prospects long term. So buy great companies for good prices. And we've talked about this several times on this. Valuations are stretched pretty much across the board. It's harder to find those fair prices. You're paying wonderful companies, you're paying exorbitant prices. Is I think what he's really signaling right now. But he can be wrong for several years before anything actually happens. And sometimes he's gone to large catastrophes and nothing's happened. But, it is something to be leery of. But he has, like I said, the luxury of actually having a long-term investment outlook. He's not worried about his quarter-to-quarter numbers. He's not even worried about his annual return numbers. Right? Year to date, he's vastly underperformed the S&P 500. Nobody's asking about that. They ask about the long-term returns. He's not even buying back his own shares right now because he doesn't think that the stock itself is undervalued. So, no, with all these cash reserves, what does it say? The market, yeah, are we expecting a correction at some point? Of course we are. We expect a correction every year, roughly around an average of 14%. The market's been on a tear since April, an absolute tear. Right, we're up, I think, close to 28% since the lows in April. The market can have a healthy correction, a healthy pullback. We can have a 10% pullback and actually still be in part of the secular bull market that we've been talking about. That's not unreasonable. And probably a big part of that is coming from what we've talked about in the past, which is valuation expectations, despite earnings underlying probably being pretty good. If you have any further questions, I would love to hear them. This month's recommendation, 1493, great book on globalization and how it has changed everybody's lives. If you get a chance to pick it up, you can listen to a little bit more about it here. And with that, thanks everybody for joining me today, and we'll talk to everybody very soon. I hope you had a wonderful Thanksgiving.